Another minus 45% correction in Bitcoin. Let's be clear though, if Bitcoin only ever went up, it would be a toy, a sandbox fantasy, but Bitcoin is not. It is the most serious monetary asset ever discovered, ever created, and seriousness comes with pain. Every single legitimate marketplace on Earth is a war zone of competing beliefs, and belief only gets priced through pain. Drawdowns are the baptism, they are the heat that forges conviction, and the wrecking ball that clears out the rot. This dip that we're experiencing, this is the toll booth. If you want the asymmetry of the other side, you have to pay in blood, you have to pay in time, and you have to pay in stomach lining. There is no VIP line. You either hold the line or you get priced out forever. There's a lot of people out there that are saying the system is breaking, but this is the system proving that it works. Every purge just continues to sharpen the signal, and every single flush in the price forces someone to admit that they never meant it, and every single price that survives this chaos is now stronger because it was earned. This is the part where the tourists leave and the owners start to show up. People look at a chart and they think that they're just seeing the price, but what they're really seeing is belief, measured, updated, and broadcast to the world in real time, because a market isn't just numbers ticking on a screen. It is a living mechanism that translates collective human psychology into price. Price is a momentary reflection of sentiment. Every single candle that is on the chart is the reflection of what millions of people think that the future is worth. Fear, hope, greed, panic, leverage, all converging into one signal. And the price goes up when belief expands, and price goes down when belief fractures. And that process, yes, is very messy at times because belief is very fragile and most people actually don't have any. A Bitcoin drawdown is the market rechecking who still believes in the long game. It is a stress test for conviction, so you can't let the volatility scare you, because the volatility is how the system finds truth. In a world where every other lie is propped up by bank bailouts, narratives, and monetary manipulation, Bitcoin doesn't have a central bank to smooth things over. Bitcoin dares to settle belief the very hard way with real money on the line. So by owning Bitcoin, you are in the arena with nothing else to help you. You are in the proving ground. And if you're still here, you're not just watching the chart, you are the chart. And everybody wants new all-time highs, but they forget what makes them possible in the first place. Everybody wants higher highs, of course. But higher highs require new buyers, and new buyers don't show up for hype, they show up for credibility. And credibility never ever comes from smooth sailing. It comes from survived chaos. When Bitcoin drops 40%, 50%, 70%, and doesn't die, that is credibility. That is credibility that is formed over and over again. That is the asset proving that it has a real demand, because real demand over time survives through stress. And you know what doesn't? Leverage. It's easy to frame the sell-off of the asset as destruction, but really it is filtration. They flush out the tourists, the gamblers, the overexposed, the over-leveraged. They hand the supply to those with real conviction, the people who mean it, the people who are here for a decade, not for a dopamine hit. And this is how the asset just continues to become more unkillable over time, not by going up in some straight line forever, but refusing to stay dead over and over again. So each dip in the market is just asking one question: who actually believes in this enough to stay? And if you're still here, you are already holding the future. To understand what's happening in a minus 45% Bitcoin drawdown, you have to understand the leverage cycle, because we know there's a lot of degens out there. Leverage is borrowed conviction. It creates the illusion of strength by pulling future buying power into the present, and that's how the price can rip higher. But what goes up like that doesn't float. It hangs suspended until gravity pulls it back down, and gravity always wins. Here's how it works. When the price starts to fall, people who borrowed too much, they get liquidated. You've been seeing that word a lot lately, I'm sure. You see, they don't get to decide to sell. They are forced to sell, and forced selling creates more downward pressure, which causes more liquidations. It's a chain reaction because that just causes more panic, which accelerates the drop. So to call it a crash is kind of a misnomer. It's more like a cleansing that needs to happen. And does it feel violent? Absolutely, because it is violence. But violence isn't malfunction. Violence is just the system working, clearing out the fragile structures before they collapse everything. So think of it like a forest fire. If you let dead brush pile up forever, you don't get a small fire, you get a mega fire that incinerates the entire ecosystem. But Bitcoin does not allow that. It burns the brush regularly, brutally, and early. That's how it protects the core. These moments of freefall are not signs that Bitcoin is broken. They are signs that it is immune. And this is how fragility is purged. This is how real bottoms form. This is how supply finds strong hands. And this is how the next rally doesn't collapse immediately because the foundation gets rebuilt during the pain. So when you see minus 45%, don't think about the loss. You need to think about the weak structures that just got wiped out and how much stronger the market will be without them. Bitcoin doesn't have a central bank, it doesn't have a PR team, and it doesn't have a bailout button. What it does have is volatility, and that is the cost of a system where nobody is in charge. There's no one to smooth the ride for you. There's no committee to massage your emotions, and that chaos, that is the decentralization tax, and you have to pay it up front in full every single time. But this is the paradox that remains. Volatility is the very thing that forces people to pay attention. It's the alarm bell that wakes people up from fiat sedation. You don't ignore a thing that just dropped 40+% and still outperforms every asset over a decade. The volatility is what makes Bitcoin unforgettable. It forces people to ask the hard questions about real money, about inflation, about self-custody, about trust itself, and it forces those questions on a timeline that they did not choose. So every single cycle just continues to deliver the exact same educational curriculum. Short-term certainty is expensive because certainty is always priced at the top. But long-term conviction, that's what you earn in these moments when it's painful, when it's public, when it looks like madness to stay. And here's the truth. The people that hold through the chaos are the ones who inherits the supply because everyone loves Bitcoin at 100K plus. But only the builders, the signal readers, and the anti-fragile freaks love it at 55K during a liquidation cascade. These are the people who end up owning everything. This moment's the part where it feels like everything is unraveling is exactly where the next rally tends to begin. And not because of hope either, but because of math. Drawdowns are never the signal that the thesis failed, they just prove that the system continues to work. Capital is being reallocated, but if you look at the Bitcoin nodes, they're confirming transactions every single 10 minutes like nothing ever happened. Weak hands are being replaced, risk is being repriced, and belief is being sorted in real time under real pressure. So this isn't the end, this is the test that produces the next supply shock, the next wave of holders, and the next price floor that nobody sees coming until it's already gone. So what do? You zoom out. Bitcoin is designed to be hard. It's built for adversarial environments. It's engineered to survive everything, and it has 90% drawdowns. Exchange collapses, government bans, media hate, internal forks, none of it ever mattered. The asset is totally undefeated, but your job isn't to predict the score. Your job is to stay in the game long enough to benefit from the outcome. So build a rule set, set your position size like it's a decade-long bet, define your time horizon in years, not weeks and months, accumulate when others liquidate, never use extreme leverage, and make no decisions in panic. Because it's really not about timing tops and bottoms, it's about surviving the process that manufactures the next all-time high. And that process, it starts right here in the exact moment that most people quit. And if you want to be positioned before the next pivot into the asset, Swan Private is for you. Swan Private helps individuals and families build generational Bitcoin positions securely and strategically. And we help you do it so you can be partnered with a professional who can help you be positioned for the next incredible wealth transfer into Bitcoin. Go to swan.com/no-second-best to learn more. My name is Adam Livingston. I am the Bitcoin Wizard. If you enjoyed this content, please like this video, subscribe to the channel, and hey, maybe buy the dip if you feel like it. Have a terrific day. Do not party too hard. Class dismissed.